What if I told you that $100, yes, just $100 sitting in your pocket right now could be the exact amount that changes the entire trajectory of your financial future? Most people hear that and immediately laugh it off. $100? That's nothing. That won't even buy a decent pair of shoes, let alone make me rich. And honestly, I understand that reaction, because we've all been trained to believe that investing is something only rich people do, with thousands of dollars, fancy brokers, and insider knowledge the rest of us will never have access to. But here's the truth that nobody tells you. The biggest barrier between most people and their financial future isn't the amount of money they start with. It's the fact that they never start at all. And today, I'm going to show you exactly how $100 can become your very first step into a completely different financial life. So stay until the end, because I'm going to walk you through the exact process, step by step, and the final part is where most people finally understand why this actually works. Let's get one thing straight before we go any further. This video isn't about turning $100 into $10,000 overnight through some risky bet or lucky trade. If that's what you're hoping for, you're in the wrong place, and honestly, that mindset is exactly what keeps people broke. This is about something far more powerful and far more realistic, using $100 to build the habit, the system, and the foundation that will eventually lead to real, lasting wealth over time. Here's why starting with a small amount like $100 actually matters more than people realize. Investing isn't primarily about the amount of money you start with, it's about the habit you build and the emotional relationship you develop with your money. Someone who starts investing $100 and builds the discipline to add to it consistently every single month will over time almost always end up wealthier than someone who waits until they have $10,000 to start seriously. Because that day of having $10,000 sitting around ready to invest often never actually arrives. Life has a way of finding new expenses to absorb whatever extra money shows up, unless you've already built the habit of directing some of it toward your future first. So let's break down exactly what to do with that first $100 step by step. The very first thing you need to understand is where that $100 should actually go. A lot of people make the mistake of thinking investing means picking individual stocks, trying to guess which company is going to explode in value next. With $100, this approach doesn't make much sense because you can't build meaningful diversification by spreading $100 across 10 or 20 individual companies. Instead, the smartest place for a beginner to put their first $100 is usually a low-cost broad market index fund or ETF, something that gives you exposure to hundreds of companies at once, all through a single investment. Here's why this matters so much. If you put your entire $100 into one single stock and that company has a bad year, or worse, goes out of business entirely, you could lose most or all of that money. But if you put that same $100 into a fund that tracks something like the overall stock market, you're essentially spreading your risk across hundreds of companies simultaneously. Some of them might struggle, some of them might soar, but your overall investment moves with the broader market, which historically, over long periods of time, has trended upward. Now, you might be wondering, how do I even buy an index fund with just $100? Don't you need way more money than that to get started? This used to be true years ago, but it's genuinely not the case anymore. Many investment platforms and brokerage apps today allow you to buy fractional shares, meaning you don't need to buy an entire share of an expensive fund. You can invest exactly $100, and the platform will give you a fractional piece of that fund equal to whatever $100 buys at the current price. This single innovation has completely removed the old excuse of, "I don't have enough money to start investing." Let's talk about the actual process, step by step, so you know exactly what to do with your $100 starting today. Step 1 is choosing a platform. There are numerous investment apps and brokerages available that allow you to open an account with no minimum deposit requirement, meaning you can start with exactly $100 or even less if you wanted to. Look for a platform that offers low or no trading fees, allows fractional share purchases, and gives you access to broad market index funds or ETFs. Take a little time to research a few options, read reviews, and choose one that feels straightforward and trustworthy to you. Step 2 is opening your account. This process typically takes just a few minutes and usually requires some basic personal information for verification purposes. Don't overthink this step. It's usually far simpler than people expect, and most platforms guide you through it clearly. Step 3 is choosing your first investment. Once your account is open and funded with your $100, resist the temptation to browse through hundreds of individual stock options, trying to find the next big winner. Instead, look for a broad market index fund, something that tracks a wide range of companies rather than betting on just one. This single decision, choosing broad diversification over individual stock picking, is one of the most important choices you'll make as a beginning investor. Step 4, and this is honestly the most important step of all, is committing to consistency. Investing $100 once is a good start, but it's really just the opening move. The real power comes from continuing to add money regularly, whether that's $20 a week, $50 every 2 weeks, or $100 every month, depending on what fits your budget. This regular habit, often called dollar cost averaging, means you're consistently buying into the market over time, regardless of whether prices are up or down on any given day, which smooths out the ups and downs of the market over the long run. Now let's address something important, because I don't want to give you an unrealistic picture here. $100 alone isn't going to make you rich. If you invest $100 today and never add another dollar to it, even with excellent long-term market returns, you'll still just have a relatively small amount of money in 20 or 30 years. The real magic doesn't come from the initial $100. It comes from what that $100 represents, the beginning of a habit that continues, month after month, year after year. Let's actually walk through some numbers to make this concrete and show you why starting matters so much, even with a small amount. Imagine you start with $100, and then you commit to adding just $50 every single month after that. Over the course of 1 year, you'll have contributed $700 total. That might not sound like much on its own, but if you continue this same habit for 10 years, assuming a historically reasonable average annual return of around 8%, you could end up with somewhere around $9,000 to $10,000, simply through consistent small contributions and the power of compounding working quietly in the background. Now extend that same habit to 20 years, and that same steady monthly contribution could grow to well over $25,000, purely from consistency, without ever needing to increase your contribution amount or take on unnecessary risk. And if, over time, you're able to increase that monthly contribution as your income grows, the results become even more significant. The point here isn't that $100 by itself changes your life. It's that $100 can be the spark that starts a habit, which absolutely can change your life over time. Let's talk about a few common mistakes beginners make when starting with a small amount like this, so you can avoid them from day one. Mistake number 1 is trying to get fancy too early. When people start investing with a small amount, there's often a temptation to chase exciting opportunities, cryptocurrency trends, options trading, or individual stocks that promise quick, dramatic returns. With a small amount like $100, the smarter move is almost always boring, steady, diversified investing, not exciting speculation. Save the excitement for later, once you've built real experience and a larger financial foundation. Mistake number 2 is checking your investment constantly and reacting emotionally to small fluctuations. When you only have $100 invested, a bad day in the market might mean you're temporarily down $2 or $3. This is completely normal and completely irrelevant to your long-term outcome. But if you check daily and let those small fluctuations stress you out, you're far more likely to make emotional decisions later, like panic selling during a larger downturn, which is one of the most damaging mistakes an investor can make. Mistake number 3 is stopping after the first deposit. This is honestly the most common mistake of all. People get excited, invest their first $100, feel a sense of accomplishment, and then never add to it again. Remember, that initial $100 isn't the goal, it's the starting line. The real results come from what happens after that first deposit, not from the deposit itself. Mistake number 4 is waiting for the perfect time to invest more. A lot of beginners convince themselves they'll add more money once the market drops, or once they have a bigger amount saved up, or once things feel more certain. This kind of waiting almost always leads to never actually adding more money at all, because there's rarely ever a moment that feels perfectly certain. Consistency beats perfect timing every single time over the long run. There's one more piece of this puzzle worth mentioning, something that ties directly into why $100 works so well as a starting point, rather than feeling like an obstacle. Money psychology plays a much bigger role in long-term investing success than most people realize. When you start with an amount that feels manageable, even a little insignificant, you remove the fear and hesitation that often comes with larger sums. People who wait until they have thousands of dollars saved up before investing often end up paralyzed by that same fear, worried about making the wrong decision with a large amount of money. Starting small lets you make mistakes, learn how the process actually works, and build genuine confidence, all while the financial stakes are still low enough that any mistake won't meaningfully hurt you. By the time your account grows larger, you'll already have real practical experience instead of just theoretical knowledge, which makes a tremendous difference in how calmly and rationally you handle your money as the amounts involved get bigger. It's also worth pointing out that the emotional discipline you build while investing $100 is exactly the same discipline you'll need later when you're investing much larger amounts. The habits you form now, staying consistent, avoiding panic, resisting the urge to chase exciting trends, are not going to magically appear later just because you have more money. If anything, those same emotional temptations get stronger as the dollar amounts grow larger, because the potential gains and losses start to feel more significant. This is exactly why building these habits early, while the amounts are small and the stakes feel manageable, sets you up so much better for the future, when the numbers involved become much larger and the consequences of poor habits become far more costly. Here's the mindset shift I want you to walk away with today. The goal of starting with $100 isn't to prove that you can get rich quickly. It's to prove something far more valuable to yourself, that you're someone who takes action on their financial future instead of waiting for the perfect moment that never actually arrives. Once you've proven that to yourself, even with a small amount, everything after that becomes about scaling up a habit you've already built, rather than trying to build a completely new habit from scratch later, under more financial pressure. Wealthy people didn't necessarily start with large amounts of money. Many of them started exactly where you might be starting today, with a small, almost insignificant-looking amount, and the discipline to keep adding to it, month after month, year after year, without waiting for permission or perfect conditions. If this video gave you the push you needed to finally take that first step, hit that like button, share it with someone who's been putting off investing because they think they need more money to start, and subscribe to this channel so you don't miss the next video where we'll break down exactly how to choose between different types of investment accounts and what to do once you're ready to move beyond your first $100. Because the truth is, your financial future isn't going to be built by one big dramatic decision. It's going to be built by one small decision, repeated consistently, starting with whatever amount you have right now. See you in the next video. Until then, go open that account and take your first step today.